and we start reaching a top, one of the key core concepts is this idea of transfer of control. One of the things you would normally expect to see is perhaps an absorption print at the top, but maybe not. Sometimes what you see is you start seeing a volume profile appearing into the top print price. One of the things that happens, of course, is the price then starts moving. Once the price starts moving, there's now a volume print coming off the high price, isn't there? What we're always trying to do is when we're watching this movement in terms of the control concept, is to watch the volume profile that develops around these selling points. So we go into this selling point here and we look at the volume. If the volume that develops on the break lower back to the break higher is less than the volume above, that's not a good sign. That doesn't mean that there's a lot more sellers at lower prices. That's more exhaustion. So what we are hoping, of course, for this to be a short trade in terms of the total volume profile, and I'll just do it side by side, is we want that volume profile to be extending as the price breaks south. Okay, so as the price breaks south, we're looking for that volume profile to extend, not reduce. And as we break south again, we're looking for that volume profile to keep extending as the price breaks south. The reason for that is it shows that there are sellers at lower prices. When we start moving south and we get a reversal off the bottom edge like this, and the profile, for example, looks more like this here, now you've got a bit of a problem, because what's happened now is that the selling at lower prices has evaporated. And because the sellers at lower prices has now evaporated, we've now got a bit of an issue, haven't we? This is called exhaustion. This is not supply. Because if this was commercial supply, they would defend that by selling at lower prices. The algorithms would work into that sell at lower prints to keep the market going. The algos haven't done that, so they must have switched off here. So that's not supply, is it? We can dismiss this as a supply storyline. The supply actually is the level above. So that supply gets eroded. And what we need to look at is we can then say, well, this is supply because there's sellers below that supply. That's not the spelling. So this is supply, but what is this? This is distribution now, isn't it? This is now distribution. So this is at this stage, this is exhaustion. So we can start to recognize how these processes build based on supplies, based on volume building, based on certain elements developing away from certain prices. And as we see this, we can start to recognize the overall shape. Every time we move lower, we can ask and challenge these shapes to give us some answers. If this is distribution, then we can start to think to ourselves, well, if there's going to be an accumulation, it's probably going to start from this area here. We're going to be looking at this as a possible accumulation area. We're not going to accumulate where the supply, of course. We're going to be accumulating where the distribution started, which normally is where we mark point number 1 on our charts. That's where normally 1 is. This is normally where A is. And we start thinking about the prospect that this could be where 3 is. That type of idea, that type of concept. Pretty simple stuff, right? So you want to be watching this. This is part of that profile process that we didn't really get a chance to chat about yesterday in class because we were getting chucked in and out. It was like trying to serve drinks in high seas with with a big, huge storm coming. It wasn't going to be very, very successful, but we tried very successfully. But we tried, and but this is what we were kind of talking about, this idea, because obviously what happens is that with the bigger volumes at the lower price, the VWAP drops down, but then stops dropping. If I look at the VWAP through this process, one would imagine it should be pretty easy to recognize what VWAP was doing. The VWAP would have came off of this, if we started it here, for example, the VWAP would have been doing, it's kind of thin, can't even see it myself. So the VWAP would be doing something like this. And then when the volume accelerates, the price accelerates down through the VWAP here. When the volume accelerates, the VWAP accelerates. And when the volume drops there, the VWAP just stays there. The VWAP flatlines into that process there. And that's what you're kind of thinking, isn't it? That's the process you're kind of looking at as a VWAP trader. Now, there's obviously going to be a lot of people this morning that haven't bothered checking their VWAP readings to see how the VWAP's evolved. Well, that would be a mistake if you were, for example, a bond trader this morning. Because if you're a bond trader, you've seen the VWAP coming off the high price, and it's never had a single. Once we finally broke the market south, there wasn't a single close above the VWAP the rest of the move lower. Not a single close above the VWAP once it broke south. However, it did touch the VWAP here. It touched the VWAP here. It touched the VWAP again here. Very close within a tick of the VWAP here. And you could have used the VWAP to have joined in on that process for a very, very substantial sell-side profit. It's a very, very useful piece of kit, guys. Now, obviously, as we go out into bigger charts, we start asking that VWAP question of the bigger picture charts. And we can see that what's happened to bonds over this process has been quite shocking, to be honest. But one of the things that we can obviously understand is that coming in from the close here, the price got to the VWAP on the way down here. Now, that VWAP is obviously going to be very, very close to where the halfback trade level was going to be located. That would be pretty much in line with what you'd expect. But again, that idea of getting out into those longer term charts allows you to make that decision, allows you to see that storyline evolving. If you don't know that price, you should know that price. It's the net control of all buyers over yesterday's whole US session and London session. So that's the control point for those buyers, isn't it? As you go into these lower time frame charts, one of the things that we do is we start to take away, we start adding some other news, we start adding some new, other information. And we told you before that the bond starts at 8 o'clock. So we go along to the 7:30 candle and we add a VWAP to it, the 7:30 candle. As we go forward with the next VWAP we add, and we'd have to take this down into a lower time frame to get the next VWAP. The next VWAP we would add, and you can see where the VWAP went offered here. See how the price breaks below that VWAP, and then the sellers come in right off the VWAP itself there from the London, right there, right there. So when the control is broken by the buyers, then you can obviously start looking for that control shifting the price down, because the VWAP is now declining. The VWAP is now above the current price. So if the VWAP is above the current price, what direction must the VWAP go in? Down, right? You can't make the VWAP go up under any condition if it's above the price. Because every lot of volume that's getting traded is going to be traded below the current VWAP, which is going to bring the current VWAP down further. It should be pretty obvious. So as soon as you see selling coming in here, you know that VWAP is going to start catching an offer, and that's exactly what happens. The VWAP catches an offer behind that. As we come into the US session, we're obviously looking at the time of 13:15s, and we put a new VWAP on the charts, and you can see that that's the VWAP that we're currently pinning off of. You can see the most recent pin on a VWAP was just there for the US session, and then the price is still offered at the moment. The qualification we've got on this is that in terms of the volume profiles, you'll probably be able to start recognizing if we start from the very, very high price and we go all the way to the current low price, there's one thing you'll be able to recognize very crystal clear, that there has been a lack of any real volume into this low price. So there was obviously a bit of supply came in at this price area here. There was obviously a massive tapering into the bottom edge here. And that was the end of the move at that point, wasn't it? End of the move. Now, this obviously is going to build more volume here during the course of this swing here. So the one thing we're going to start looking at is there enough volume in this area to take over from this, which means that this becomes real supply. If that's not real supply, then the real supply just moves up to that last area just here, isn't it? So this supply moves up to this area here. That's where the supply came in for that move lower, and that's the level that you'd currently know about as a supply level. You've got to build out your picture, guys. Try and ask the question, did anybody ask the question this morning? Who is in control of my market based on the hourlies? Did you bother doing it, or did you forget all about it? Did you ask the question, who's in control of my London session? Who's in control of the monthlies, the weeklies, from yesterday's closing, from yesterday's open? Have you gained that information before you started today's markets? If you haven't, you never learned anything from yesterday's classroom. You've got to be asking that question because you need to know which market is in control of the book at the moment. Whether you agree with the control or not, that's a different question. But you've got to know who is still in control, guys, because that's what determines how aggressive you become as a trader. If you're waiting, if you were drawing this chart, for example, here, there wouldn't be an opportunity to buy unless you know for a fact you're going to be going against control. There wouldn't be an opportunity to buy into this. You need to have that very aggressive lean. You need to see what you're looking for. You need to be able to recognize it. You need to be able to execute aggressively. If the price were to go back above that control area here, and we started to see something like this, this is perfect. Because what's going to happen in this balance area here is the value is going to push higher in terms of profile. And that means that this is going to be the perfect buy opportunity. Once you go back into that kind of area there with a retest into the lows, that is the locals trade right there. That's the locals trade. That's the one you want to try and take advantage of right there. It's pretty simple stuff, isn't it? Because whilst you might not ever use it, you should still know about it. You've got to still know what is doing in the marketplace. You've got to still be asking that question. Well, damn it, I can see exactly what the hell is going on here. Because that change of control is what happened to oil from the Brent Open. If you look back at the oil chart now that I've put the VWAP on at 8 o'clock here, you'll see the VWAP at 8 o'clock, it was all buy control, buy control. A little bit of volume there, we got back above it, buy control. Back below it here, selling comes in, and then boom, big sell-off. Pulls back to the VWAP, starts to straddle the VWAP on the buy side, sell side of the market. But look at what happened when we got above the VWAP and the supply at the same time. When we got above the supply that was in here, and we got above the VWAP at exactly the same time, everybody's now looking at that and saying, damn, Nicky, that's the deal. That's going to go bullish. And that control change has had this amazing effect on the buy side of the book. Now, if we look at that move higher, we can see what's happened to the move higher. You can see where the VWAP's starting to languishing behind a little bit. You can see the price is starting to accelerate. That volume is going to build that VWAP up tighter. And as the VWAP gets up tighter into that area, of course, we can start to look at this. Hold on a second, I'm just watching. I might have a gold-silver spread, guys, coming up, just so you know. I'm going to start putting in some orders. Maybe grab a bit of business in here. Okay, I've got the trade on and I'm making some monies. Only got 6 spreads on, guys. Only got 6 spreads on. Let me add to this position. I like it. I like it.
Hey guys, this is fun. Journey of a spread trade, right? Go right from who's in control to we know who's in control. Grab your cash. Hey, good morning, Gary. And hopefully we'll get through any tech issues today.
So we've popped that spread on, and you can see early diddles on the spread so far. We're doing okay. We've got an $1,100 loss on gold. You can see there we've got an $1,100 loss on gold, but we've got a $1,600 profit on silver. So we're making about 500 bucks on this spread at the moment. So that's okay. It's a decent start to the spread. And we're just going to see if we can, we're going to see how long we can hold on to this. I've got about $1,000, $700, let's be realistic, $700 profit on it just now. It moves every now and then to just under $1,000 on an uptick on one and a downtick on the other. So we've got about around an average of between $700 and $1,000 on this trade at the moment. So I'm going to give it some time, and we'll bring the next screenshot whenever I'm getting into a position where I might think about closing the spread out. But at the moment, happy enough to let it press on a little bit here to see if we can improve on it a little bit. And if I can improve on it, then we're in pretty good shape at that point. So I like it. I like it. I like it. I like it a lot. And we'll obviously see if, as I said, we can improve on the trade. I'm just moving some money in and moving some money out. I'm moving some money in and moving some money out to try and get as big a size position as we can without getting ridiculous. I'll try and do about 10 spreads maximum. And my objective in this is to make 2,000. That's, I think, a fair objective is to try and make about $2,000 profit on a trade. Remember, the whole point to this is it's, we've got a lot of different outs on this. Whether prices go up or whether prices go down, we've got different outs that we can try and take advantage of. And we've just got to try and make sure we're in the market long enough to take advantage of each of those outs if they show up. So you can see how the trade has evolved since then. I've just taken another quick screenshot there so that I can show you what the evolution of that trade looks like. So you can see that we started to come crashing down off the silver profit, $1,600 down to $900. However, the gold loss, which was $1,100, dropped down to $130. In other words, we're still very much in profit. In fact, we're more in profit at this stage than we were here. We're actually making just under $800 profit, which is nice. On 10 spreads, that's perfectly reasonable. I'm happy with that. And the idea is to try and make about $2,000, maybe possibly. I think there's as much as $3,000 profit on this spread to be made. So I'm going to be watching for opportunities to see if that can be converted into a very, very substantial $3,000 profit. But we'll wait and see what happens. Now the silver's losing and the gold is making. We've got a profit on the silver. Sorry, we've got a profit on the gold and a loss on the silver. But you can see how it's evolving here. I'll take another quick screenshot so you can see how this trade has developed. And you can see that this is the whole beauty of spreads. This is the beauty of spreads. Take a look at what happened to this change. Look. You see what's happened, guys? The gold, which was losing money, is actually completely flipped around now. It's making $1,600 profit on the same trade. The silver, which was making money, has now flipped over to a $300 loss. So now I'm making $1,300 profit. Now I'm making $1,300 profit, guys. You can't make it up. It's just a huge, profitable little trade. And all we've got to do is keep smashing into it, make a lot of money, make some big decisions. And that's exactly what we're doing just now, guys. We're making some pretty big opportunities here, some pretty impressive little trades. So it's up to me to spread this into the maximum profitability, let the algos take over and manage out that position, and then from that point onwards, we can obviously we can just add to it and subtract as we see fit. At the moment, it's a bit jumpy. We've got about $1,000 profit on our gold. We've got a $900 profit just now on a $900 loss just now. Sorry, on our silver. So it's kind of jumping all over the place just now. Some pretty high volatilities on silver just now and gold, and for that reason, it's a jumpy little soul. But obviously, as soon as it jumps in our favour, we'll be ready to execute for the walk away from this for a profit of about maybe. It looks as if we might be able to do about 2 or 3 grand now on this trade. Might be able to do 2 or 3 grand in this trade now, guys. So here's one of the interesting situations here. You'll be able to see I've added a couple of silver positions. I've added a couple of silver positions to this trade now. And you can see what we're at. We're now in a double alpha profit. We've now got a profit on our gold and a profit on our silver. So you can see how this position evolves. You see what goes on, guys? You see how it works out for us? Do you see how we work it into these types of trades? Now you see what happened to the silver position. Because we added 4 contracts to this, 2 contracts to the silver position, because we added 2 contracts to the silver position, we've now got a profit of $2,100 on silver. And now we've got a profit still of $70 on the gold. So you can see that the total net profit is $2,240. $2,240. And yet when you look back at that, you can start to see that the gold was hedged out against the silver at the starting point. We told you it would make $2,000. We told you it would end up over 2 grand in profit. I know it's 10 spreads. I know it's not a lot of money for 10 spreads, but when you think about it, what is 10 spreads? Well, 10 spreads, if you think about how much metals exposure that we've got on that trade, we've got $1.7 million of gold exposure, right? $1.7 million of gold exposure. And we've got 14 contracts in silver. We've got $1.7 million of silver exposure. So what's my net metals exposure? 0. I've got $1.7 million worth of gold, which I'm short on, and I've got $1.7 million worth of silver, which I'm long on. I have no metals directional risk. Now you might argue with that and say, well, yes, you have, because the spreads and the way that the price moves and the volatility and all that. Yep, we get it. I understand there's always going to be some directionality to it. But the point I'm trying to make is that this happens all the time. This trade is an amazing opportunity to make some money, which Max will be gladly doing and assisting you with when Max gets kicked into life at some stage. Brilliant trade, lovely, fantastic outcome, guys. Crazy. Anyway, we got all the way up to $73.70. We took out all of that top edge. We ended up a full measure against the bracket high, bracket low, pretty much. We're pretty much close to that top edge. We missed it by a few ticks into the very, very pink top edge levels. The top edge level, $74. And you can see where that supply line is likely to be located. It just never quite reached it on that last leg higher as we came into the Nymex Open. And remember, the Nymex Open is a new starting point for your VWAP. It's a new starting point. So when you get into the Nymex Open, you put a new VWAP on your charts, and that gives you the New York session control. And you start to recognize who's in control of the markets. You can see that going into the Nymex Open, the control was dominated by buyers. Your job should be to try and stay long. And now we're starting to see a rotational market because the New York trade is now rotating off the VWAP. And you can start to recognize sellers who are now going to try and take control of this level, which means obviously trying desperately to push the price through that last little level in the background, which is this price level here, the New York Open. So we'll see how it gets on, guys. I think this is going to be straddled for a while. I'm not sure we're going to see much more activity in this until we start seeing what the Nymex, until we start seeing what New York Stock Exchange makes of last night's actions. We had a quick look at last night's macro closes. They were a little bit interesting. There was some small rotations out of the high prices by the likes of the Warrens of the world and by the quality spreads, by the specialists, but they were only small rotations. What it does show, though, is if we start seeing any weakness again today, we've just got to bear in mind it's still at a very elevated skew. It did decline, but it is still elevated, and we just have to pay attention to that as it evolves today, guys. Careful as we get into the New York Open in 10 minutes. 10 minutes, guys.